Revenge trading is perhaps the most dangerous behavior that can destroy a personal or a prop firm account faster than any other mistake. It's the emotional response of immediately jumping back into the market after a losing trade, driven by anger, frustration, and the desperate need to recover lost money. While revenge trading is destructive in any trading context, it becomes absolutely lethal when you're trading with a prop firm's capital under their strict rules and evaluation criteria. When you engage in revenge trading, you're essentially trading with your emotions rather than your strategy. The moment you close a losing position, instead of analyzing what went wrong or taking a step back to reassess, you immediately look for another trade to win back what you just lost. This impulsive behavior completely abandons risk management principles and often leads to even larger losses, creating a downward spiral that can eliminate your prop firm account in a matter of hours or even minutes. Most prop firms have daily loss limits, maximum drawdown thresholds, and profit targets that you must meet within certain time frames. When you revenge trade, you're not just risking your own money like you would in a personal account. You're risking your entire relationship with the prop firm, your evaluation progress, and potentially your trading career. The typical revenge trading scenario in a prop firm context goes like this. You take a trade that you believe has a high probability of success, but the market moves against you and you hit your stop loss. Instead of accepting this loss as part of trading, you immediately feel the urge to recover that money. You convince yourself that you can make it back with just one good trade, so you enter another position, often with even larger size than before. When this second trade also goes against you, the losses compound and panic sets in. You start trading even more aggressively, abandoning your risk management rules entirely, until you either hit your daily loss limit or breach your maximum drawdown, effectively ending your prop firm journey. The psychological drivers behind revenge trading are deeply rooted in human nature and our relationship with loss. Loss aversion is a well-documented cognitive bias where people feel the pain of losing money roughly twice as intensely as they feel the pleasure of gaining the same amount. When you lose money on a trade, your brain perceives it as a threat and triggers fight or flight responses. The fight response manifests as revenge trading, where you aggressively try to recover the loss immediately. Pride and ego also play significant roles in revenge trading. Many traders view losing trades as personal failures rather than normal business expenses. They feel that accepting a loss somehow reflects poorly on their abilities as traders. This ego-driven thinking makes them want to prove to themselves and others that they can win, leading to increasingly reckless behavior. The fear of missing out on recovery opportunities creates additional pressure. After a loss, traders often worry that if they don't immediately get back into the market, they'll miss the perfect setup that could recover their losses. This fear creates a sense of urgency that overrides rational thinking and proper trade analysis. Revenge trading becomes even more destructive in prop firm environments because of the additional pressure and constraints. When you're trading an evaluation account, every loss feels more significant because you're working towards specific profit targets within time limits. The pressure to perform can make small losses feel catastrophic, intensifying the emotional response that drives revenge trading. The financial consequences of revenge trading in prop firm accounts are often terminal. Unlike personal accounts, where you might survive a series of bad decisions, prop firms have non-negotiable rules. If you breach your maximum drawdown or exceed your daily loss limit through revenge trading, there's no negotiation or second chance. Your account is immediately terminated and you lose the evaluation fee and all efforts you have made. Beyond the immediate financial impact, revenge trading can create lasting psychological damage. Traders who destroy prop firm accounts through emotional trading often develop anxiety and fear around trading in general. They may lose confidence in their abilities and struggle to trust their strategies, even when those strategies were profitable before the revenge trading episode. To overcome revenge trading, you must first develop awareness of your emotional state while trading. Create a predefined routine for handling losses that removes emotion from the equation. When you close a losing trade, immediately step away from your trading platform for at least 15 to 30 minutes. This cooling off period allows your emotional state to normalize and prevents impulsive decision-making. Implement strict position sizing rules that account for consecutive losses. Never risk more than 1% of your account balance on any single trade, and consider reducing your position size after losses. Some successful prop firm traders use a scaling approach where they reduce their position size by half after each loss until they achieve a winning trade, then gradually scale back up. Develop a loss acceptance mindset by reframing how you think about losing trades. Instead of viewing losses as failures, train yourself to see them as business expenses, similar to rent or utilities for a physical business. Every trading strategy, no matter how profitable, will have losing trades. Accepting this reality intellectually and emotionally is crucial for maintaining discipline. Create physical barriers between yourself and revenge trading opportunities. Some traders physically remove themselves from their trading setup after a loss, going for a walk or engaging in a different activity. Others use software that locks them out of their trading platform for a predetermined period after closing a losing trade. The key is creating friction between the emotional impulse and the ability to act on it. Develop a support system of other traders who can provide accountability and perspective. Join prop firm communities or trading groups where you can discuss challenges and get support during difficult periods. Sometimes simply talking through the emotions with someone who understands can prevent revenge trading episodes. Finally, remember that prop firm trading is a business, not a video game or gambling activity. Treat every decision with the seriousness it deserves, understanding that emotional trading can end your prop firm career instantly. The traders who succeed with prop firms are those who can maintain discipline and emotional control even during challenging periods. The path to overcoming revenge trading requires consistent practice and self-awareness. By implementing these strategies and maintaining strict discipline, you can protect your prop firm account from the silent killer that destroys so many promising trading careers. Remember, the goal isn't to never have losing trades, but to respond to those losses in a way that preserves your capital and keeps you in the game for the long term. Revenge trading and overtrading often go hand in hand. After taking a loss, many traders feel an urgent need to win their money back, which leads them to place impulsive trades without a clear setup. This emotional reaction, revenge trading, quickly turns into overtrading, where you keep entering the market not out of strategy, but out of frustration and the desire to recover. If you've ever caught yourself stuck in that cycle, make sure to check out our other video on overtrading to see how it silently destroys discipline and drains your account.